Welcome to today's Explainer. Look, we've all seen the crazy headlines, right? Cryptocurrency minting overnight millionaires, but also completely wiping out massive fortunes literally in the blink of an eye. Today, we're going to cut right through all that noise and hype. What we've got for you is a step-by-step survival guide for navigating this incredibly chaotic, but potentially really rewarding world of crypto. No jargon, no empty promises, just the facts. Let's get into it.
You really gotta wonder, what actually separates the people who win big from the ones who lose the shirt off their back? A lot of folks think it's just pure luck, or maybe perfect market timing, but honestly, it's not. The real game changer here is knowledge and strategy. The folks who actually survive and thrive in this space are the ones who know exactly what they're buying and they stick to a strictly disciplined plan.
Okay, let's dive right into this. Here's our roadmap for the Explainer. First, what is cryptocurrency? Second, the real risks involved. Third, your first investment steps. Fourth, building a crypto portfolio. And finally, number 5, strategies for long-term success.
All right, Section 1. What is cryptocurrency?
Before you even think about dropping a single dollar into this, you absolutely have to know what it is you're actually buying. So let's break down the core technology with a really simple analogy. Think about your traditional bank. It's totally centralized. Your money is tracked in a hidden ledger, basically a private book managed by some guy sitting behind a massive, locked vault door. Only the bank sees it and you kind of just have to trust them. But a decentralized blockchain? Completely different. Imagine instead of a locked vault, there's a giant, transparent community spreadsheet projected on a massive stadium screen. And every single time someone spends money, thousands of independent people sitting in that stadium verify the math all at the exact same time. That is crypto in a nutshell. It's a shared community spreadsheet verified by thousands of people instead of being controlled by one single manager.
To put it in more formal terms, a blockchain is a decentralized public ledger. It's maintained by thousands of computers all over the world, recording every single transaction publicly and permanently. This network literally completely removes the need for a bank or a government to verify your transactions. The network itself does all the heavy lifting.
Because of this setup, when you own crypto, you aren't actually holding a physical coin in some digital vault somewhere. You don't possess a shiny virtual piece of metal. What you actually own is a cryptographic key. Think of it like your own personal VIP ticket to that stadium we just talked about. It's simply unique digital proof that a specific amount of currency on that giant community spreadsheet belongs to your address and yours alone.
Now, there are literally thousands of these cryptocurrencies floating around out there, but only a handful really dominate the space, and they all do very different things. Bitcoin is the granddaddy of them all. Think of it as digital gold, a store of value. Ethereum, on the other hand, is totally different. It's a programmable blockchain that actually powers apps and NFTs. Then you've got newer platforms like Solana and Avalanche that are built to solve specific speed and cost issues. And finally, stablecoins. These are pegged directly to the US dollar and are mostly used to keep your value steady while you're trading. Because each of these serves a completely different purpose, it absolutely dictates where you should be putting your money.
Moving on to Section 2, the real risks involved.
A lot of explainers completely skip this part, but we need a serious reality check right now. Crypto is genuinely high risk. Let's look at the real factors here. First up, extreme volatility. Bitcoin has dropped 80% from its peak, not just once, but multiple times. If you can't stomach seeing your investment chopped in half, this market's going to be brutal for you. Second, rampant scams. Unfortunately, this is a massive vehicle for global financial fraud. Third, changing regulations. Governments around the world are literally still writing the rules, which can make prices swing wildly. And finally, there is zero safety net. There's no FDIC insurance. There's no 1-800 customer service number to call if things go sideways. If you lose your password or accidentally send your crypto to the wrong address, that money is gone forever. No do-overs.
Which brings us to the absolute golden rule of this space. Only invest what you can afford to lose completely. We aren't saying this to scare you. It's just the absolute baseline foundation of smart crypto investing. You have to accept this survival advice before you go any further.
All right, Section 3, your first investment steps. Let's get you set up safely.
Now that we know what we're up against, here's your actionable blueprint for setting up your very first crypto account the right way. Step 1. Choose a reputable exchange. We're talking Coinbase, Kraken, or Binance. Please avoid those sketchy, random offshore exchanges with zero oversight. Step 2. Complete your KYC, which just stands for Know Your Customer. You're going to have to provide an ID or passport, and don't worry, this is totally normal for legitimate platforms. Step 3. Secure your account immediately. You absolutely must use a 2FA authenticator app. Do not rely on SMS text messages. Hackers can easily hijack your phone number with a SIM swap, and then it's game over. Step 4. Fund your account with a bank transfer or card. Start small. Even just $50 is a great way to safely learn how the mechanics work.
Next up, Section 4. Building a crypto portfolio.
Once you're all set up, you need an actual strategy so you aren't just out there throwing darts blindfolded. Serious investors use what we call the Core, Explore, and Speculate framework. And this brilliantly illustrates how a safe portfolio is heavily weighted toward the core. That means 60 to 70% of your money is in established heavyweight assets like Bitcoin and Ethereum. Then your Explore layer takes up about 20 to 30%. This is for established altcoins that actually have real utility. And finally, you severely limit the Speculate layer to 10% or less. This is for those high-risk, brand-new projects. Honestly, any money in this layer should be genuinely disposable.
But how does all this fit into your larger financial picture? Well, financial pros generally suggest keeping crypto as a pretty small slice of the pie, usually just 5 to 15% of your total investment portfolio. It should comfortably sit alongside your traditional stocks, bonds, and real estate. Going all in on crypto? That's not an investment strategy. That's just gambling.
All right, bringing it home with Section 5, Strategies for Long-Term Success. If you want to survive and actually turn a profit over the long haul, your absolute ultimate weapon is dollar cost averaging, or DCA. Here's how it works. Instead of dumping your entire life savings in all at once and then totally panicking the second the price drops, you just invest a fixed amount on a regular schedule, say $100 every 2 weeks, completely ignoring what the current price is. When prices are high, your $100 buys a little less. When they drop, you automatically buy more. It's brilliant because it completely removes that stressful, impossible game of trying to time the market. It's basically a psychological hack to stop your own emotions from tricking you into panic selling. Next, we have to talk about hodling versus trading. Fun fact, the word hodl actually started as a typo for the word hold on a crypto forum years ago, but it stuck and became the ultimate mantra of the crypto world. Listen, as a beginner, your goal is to buy quality assets and simply hold them through all that crazy volatility to build real, lasting wealth. The data on this is painfully clear. The vast majority of active day traders and panic sellers in crypto lose their money. Seriously, don't try to outsmart the daily charts. Let's cover some essential long-term housekeeping. First up, security. If you find yourself holding more than $1,000 in crypto, you really should consider moving it off the exchange and into a physical hardware wallet, like a ledger or a Trezor. Always remember the famous crypto saying, not your keys, not your coins. Second, and this is absolutely crucial, the IRS definitely knows about your crypto. Every single time you sell, trade, or even spend it, that is a taxable event. Do yourself a massive favor and use automated tax software like Coinly or CoinTracker right from day one to save yourself a huge headache later. Okay, let's do a rapid-fire checklist of massive red flags you need to run away from. First, guaranteed returns. They do not exist in investing, ever. Second, celebrity endorsements. I promise you right now, Elon Musk is absolutely not sliding into your Twitter DMs to give you free Bitcoin. Watch out for any high-pressure tactics telling you to invest right this second, projects with totally anonymous founders, or anybody who cold messages you first about an opportunity. And finally, stay far, far away from meme coins being pushed by social media influencers. They are almost always just a scheme to take your money so the promoters can cash out. To wrap this whole shebang up, here is your ultimate empowering crypto starter checklist. Open an account with a reputable exchange. Start super simple with just Bitcoin or Ethereum. Use dollar cost averaging to take the emotion right out of it. Lock your security down tight with an authenticator app. Keep your tax records clean and organized. And above all else, never ever invest more than you can afford to completely lose. If you can balance understanding what you own with smart diversification and consistency, you are going to be light years ahead of the crowd.
So as we close out today's explainer, I want to leave you with this final thought. The crypto market is quite literally a machine designed to transfer wealth from the impatient straight to the disciplined. So what's it going to be? Are you going to let the hype dictate your moves? Or are you going to use these exact strategies to take full control of your financial future? Are you already in crypto, or are you just getting started? Let that sink in, apply these lessons to your own journey, and I'll catch you in the next one.